Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson with a breakdown of the action in today's session, Tuesday, August 13th, where it was a bullish day for the major indexes, and underneath the surface, a number of stocks flashing bullish signals as well, Ed.
Yeah, the indexes look good, but I also want to take a look at three stocks: Sea Limited, Samsara, and Monolithic Power.
Okay, well, we will analyze those stocks, but first, let's analyze the major indexes. Here's a look at the Nasdaq Composite closing up 2.4% on the day, while the S&P 500 turning in a strong performance as well, up 1.7%. The Dow also with a 1% gain today, and small caps participating as well, with the Russell 2000 up 1.7%. So we are particularly focused on the action for the Nasdaq and the S&P 500. And in terms of getting this market rally back on track, seems like today was a big step in the right direction, Ed.
Yeah, it was strong gains, 1% plus gains on all the major indexes, over 2% on the Nasdaq, higher volume than in the prior session. There had been some wedging kind of activity, sort of lowish volume, smaller gains as we were recovering from that August 5th sell-off, and that we've obviously come back a fair amount. But today, really strong volume, really strong gains, a lot of leading stocks moving as well. It's nice to get back above the 21-day line. It's the first time since, I think, June 16th that the Nasdaq has closed above that level. So almost 2 months, still below the 50-day line. So that's a resistance level. I mean, there's always another test. The thing is that, it's like, oh, you win division, then you have to win the conference champion. There's always another round to do, but that's something to note. And if we look at the S&P 500, that's even more evident, where it's coming right up to it. I mean, that's really coming up. Obviously, today, the producer price index provided a tailwind. It was much lower than expected overall and in core, but we got the CPI tomorrow. So this is one of those days where you would be thinking, you could probably be adding some exposure because of the way the indexes are acting, the stocks are acting. But you do have to remember, it's like, well, we'll see tomorrow morning how the CPI comes in, and then going forward. But definitely seemed to be a bit of a character change today.
Yes, totally agree, Ed. So a lot of encouraging progress made, hurdles cleared, of course, as you mentioned, still more to go. And as it pertains to the NASDAQ, not only did we get back above the 21-day line, but we've also now gotten back above some of the recent lows around, I would say, what is this, the 17,300 level. So getting back above that is progress as well. Also, if you draw the line back, that correlates with an area of strength that we saw in the market. So I'm liking the progress that we're seeing, checking more boxes. But as you mentioned, we got to take things one day at a time. We want to build off of this strength, because a couple of things could play out from here, right? Scenario one would be we continue to build on this strength and then maybe get some sort of V-shaped recovery. We could chop around from here because, of course, like you mentioned, we have some more economic data out tomorrow that's going to be very closely watched. So it could be a volatile day, or we could get rejected. I mean, the S&P 500 coming right up to the 50-day line. Are we going to turn tail and have another leg down? Those are just some of the scenarios that could play out from here, but we will trade off of the evidence that we currently have, Ed.
Yeah, and that's why we talk about doing it gradually. It gradually sounds, boring. I just want to get in. But if you're like, say, 20% invested right now, if you got invested and things are working, if the market continues to work, and if you add 10% a day, you're 80% invested in just a few days. So if this is a rally that has any kind of real legs, there'll be an opportunity for you to participate. So that's why, let's take it one day at a time, see what the evidence is giving you.
Mm-hmm. Yeah, definitely makes sense to be dipping the toe in the water. The other thing I like to think of with the major indexes is, if the index was a stock, would I buy it? Of course, we can treat the indexes a little differently in terms of our initial signals to be dipping the toe in the water, as we mentioned. But in terms of what would be the ideal setup for the market. And to me, Ed, when you get a sharp break like this, bullish to see the quick snapback, but it seems like if we're going to build on this progress, we need a little bit more time. It seems like it would be unrealistic, or at least just lower odds to see us going straight back up into new high ground. One could imagine a little bit of, volatility or consolidation, or, the most bullish scenario, I think, if we do continue to make progress, is to see a tightening up that we can then spring from. So those are just a couple of things that I'd like to see. What about you?
I agree. It does seem unlikely to go all the way back. I mean, obviously, some of this bounce back is that we're not going to have a global meltdown like it looked like for 5 seconds on August 5th. So we've come back from that. But the other situation, yeah, bouncing on the 50-day line, the 5,500 levels, those seem to make sense. We have the CPI tomorrow. We have probably, Jerome Powell speaking at the end of next week. And then soon after that is NVIDIA. And you talk about a stock. I mean, that's like the stock of the market. That's not above its 50-day line. It looks a lot like the Nasdaq. Shocker. But it's like, it's not, you wouldn't normally think of this as a position. Oh, some people would say, oh, look, it's breaking a trend line, but it's still below the 50-day line. So you'd like it to be above that. And it wouldn't be surprising to see this chop around. I mean, that has earnings in 2 weeks. So you could imagine a lot of scenarios with Powell, NVIDIA, some things around there. Again, we'll take it as it is. We could have had this conversation on August 5th, and we'd have a much different conversation about what scenarios we're talking about. Now we're talking about how we might be going up or pausing. But that's what we're looking at here. So yeah, there definitely could see some chop around, and that's why being gradual is important, because it's like it'll be easier to withstand a little bit of a pullback if you're just modestly invested. If you get ramp in and then all of a sudden the market comes back a couple percentage points and some of your stocks are down 6%, it's like, well, that's just a different scenario. So yeah, a lot of things looking at here.
Right. And then also right around 17,000, I think there's some key levels to watch. So I think 17,000 is a key round number. And then also today's low. If we are going to build on the strength, we definitely don't want to close below today's low. So we'll keep that in mind as well.
100%.
Okay. Any thoughts on blue chips or small caps, Ed, before we take a look at some other ETFs? I mean, here's a look at the Dow getting back above the 50-day.
I mean, one thing to ask is like, are we going to see the Dow and small caps lead if we're back in a risk-on mentality? I mean, that's one reason why. I mean, there's other reasons, and it's not saying they can't participate, but it'll be interesting to see if they can lead. But it is nice. The Dow is back above the 50-day line and the 21-day, so it's not lagging too much. The Russell's coming right up to the 50-day line. Again, that one really had a big sell-off, but it was pretty broad. It was a broad day today.
Yes. Okay. Speaking of, let's take a look underneath the surface at some ETFs. Here's SMH representing the chips. Looks also like NVIDIA quite a bit, of course, no surprise, up 4.1%, getting back above the 21-day line after just a couple of sessions ago, testing support at the 200-day. We also have IGV. This represents software trying to get back up on its feet, get itself together, getting back above the 200-day line a couple days ago, now above a shorter term moving average, that 21-day line, the 50-day looms large, but we do have a trend line that was cleared. IGV up 1.8% on the day, Ed.
Yeah, and these are things like that. One thing you could do if you're not that comfortable with individual names, with some of them below, like, I don't want to buy NVIDIA, I don't want to buy Microsoft, or things like that. You could try some ETFs or broad things like the Nasdaq or some version of the Nasdaq. So those are ways to play an emerging rally if you're not that comfortable with the individual stocks on offer.
Yeah, that's such a great point. Let's also take a look at XHB. This represents the home builders, up 2.1% today. Your thoughts, Ed?
Yeah, we're seeing a lot of stocks, a lot of sectors are like this that sort of moved out and then finally came down hard, but they found support. And so this is definitely looking interesting. It looks like it needs to push a little bit more, because it's got the 21-day line, the old buy point. It'd be nice to get that little bit more at this point. But definitely these are not out.
Okay, and then we want to take a look at XLV. This represents healthcare. Looks like, is this it's if not a new closing high today, in terms of the recent action here, it's getting pretty darn close, Ed.
Yeah, and there's a lot of areas. I mean, there's some growth names, defensive growth, and this
Yeah.
is an area that seems like it should do okay regardless of how the economy is. I'm not saying that these stocks take off, and obviously individual names, but we're seeing biotechs, big pharma, health insurers, hospitals. There's a lot of areas of medical that are doing well, even
Mm-hmm.
though it's a big disparate sector. So definitely one to be watching, even if growth tech stocks are coming to the fore.
Exactly. A number of stocks within this area at that sweet spot, as you mentioned, of defensive and growth. So I can see the appeal there. Okay, let's take a look also at the 10-year treasury yield before we move on, because the Fed is in focus with the CPI coming out tomorrow. What is this going to impact in terms of the future of interest rate cuts?
I mean, we're seeing the yields come back not too far from where they were, and that was panic buying into treasuries. This is not panic buying into treasuries. It's like thinking, okay, yields are likely to come down, the economy's doing okay. We'll see with the CPI report. And then there's other numbers, a lot of economic data, retail sales, a lot of current growth economy numbers on Thursday. But yeah, this has been a big tailwind for the market. Obviously, not that plunge, then everybody's panicking. But the general gradual trend has been very
Mm-hmm.
positive for stocks.
For sure. Okay, now let's take a look at a couple of stocks of note, starting with C. Ticker here is SE in the retail internet group. This is a Singapore based company, and investors really liked the earnings report out today. And the stock up almost 12%, a powerful day, getting back up to recent highs after correcting some 28% over a matter of a couple of weeks. Really seeing some strength coming back into this name here today.
Yeah, and the numbers weren't great. I mean, it was a miss on earnings, and sales were strong, and I think pretty bullish about things going forward. But yeah, this one, market reaction was initially down in the pre-market. There were huge gains back above the 50-day line. There's a trend line that it broke that could have been bought. You could argue that now there's maybe you'd want to see it pause. I mean, it's made a really big run. That's a lot of days up. Really strong volume today. So nice to see that. So you could be buying it off of that trend line still, but you might also just want to see if it pauses here. But yeah, this is an area. This is a stock that can go on massive runs, and so the anticipation is that it's going to be tremendous earnings for this year. Like this comeback, and you can see on a monthly, it can go to the moon and then crashing back down. So that was an amazing move that it made. Back, before COVID, then came down trying to come back up. Probably won't have that kind of run, but just because what kind of stock can have that kind of run again? But it's definitely one that showing a lot of strength, and there are definitely some Asian e-commerce firms that are doing well. So while this group is sort of not this is the best group, when you look at like Coupang or PDD, those are names that are doing pretty well as well. Coupang is in South Korea. That had a strong earnings move. That one's acting well. And PDD will have earnings next week. And PDD's Timo, which is also in the US, but it also competes against Sea Limited in Southeast Asia.
Mm-hmm. Great perspective there, Ed. And SE here with a turnaround story that is unfolding, but it's traveled a lot in the last 2 weeks. The stock has. So
This
I
is not your
agree.
Viking cruise kind of safety. You're definitely speedboating around and worried about turning over for sure.
Yeah, we'll have to see if it can tighten up here. I think that would be a nice development. Okay, next on the list, let's take a look at IoT. This is Samsara in the enterprise software group. Got a breakout from a cup with handle base today. The stock getting back above or closing quite close to a round number at 40, Ed. So taking a look at the weekly chart here, this is a stock that we've talked about in the past. It really likes to form bases. It's gone up since that December quarter of 2022, but it's been a bumpy ride along the way, to say the least. So is buying strength here a good idea?
This one's sort of in between because luckily it's not already at a new high. It's not crazy, if you like, it's not that close. It's getting extended from the 50-day line, but nothing like it often has. And often it'll do that breakout on earnings and then go sideways and turn around. So I mean, you don't know if it'll break out or blunt down, but there is some time before that. I also think it showed some strength. It's extremely volatile. Investors have to know it. But back on August 5th, when a lot of you would have thought this one was really going to tank, but that one actually rose that day. It undercut the 50-day and 200-day line, but actually rose, which was pretty impressive and came right back up. So it's showing some strength here. The fundamentals are really strong. It's now turning it's sort of really turning profitable this year. I guess it did at the end of last year because we're in at fiscal 2025 now, but it's sort of building on that. So if you were to buy it, this is about the time to die, because it seems like if it gets up to 42, earnings come in, it's like, well, what do there's just too many of those times. And I can totally get why somebody said, like, what are you talking about? I want nothing to do with this crazy stock. And that is perfectly legitimate, but showed really strong action in the last few weeks. And just wanted to point this one out. This was our stock of the day yesterday.
Okay, great. Yeah, I mean, you make a lot of really good points there, Ed. So if it can make progress heading into earnings and traders can have a profit cushion ahead of the report, that would be ideal. So one to watch as we're starting to see software stocks come back into focus. Let's also take a look at MPWR. This is Monolithic Power, and it's in the semiconductor fabless industry group, which we usually talk about NVIDIA. But if you compare this stock to the leader in the group from a technical perspective, obviously from the fundamental perspective, NVIDIA has had 4+ quarters now of triple digit top line and bottom line growth. This is no NVIDIA from that perspective. But if you look at this chart and you compare the two, really impressive to see how this had, we did see a pickup in volatility, but it really weathered the storm of the last couple of weeks quite well.
Yeah, and it looks like it's on its way to building a new base after this week. I believe it'll be a flat base after this week, maybe a base on base formation. Today, it sort of broke above that trend line. Clearly is above the 50-day line. I mean, yesterday it's been nudging above there for a couple of days, but now clearly above it. So it was actionable here. The RS line, this one's basically at a high. So that one, and this is just not on our long-term leaders, but it's on our long-term leaders watch list. It's sort of unusual for a chip maker to do that because they tend to have such big volatile moves, but this has had a pretty strong track record of outperformance. So it's definitely one to be looking at. This is not in AI, I believe. This is more, but I believe it does data center chips are in there that are or chips that are getting involved in there. So, and I hope I'm getting that one right, but the fundamentals have been improving gradually lately, turning from negative, seeing it turn around. So that's a positive on that front. The AD rating is C+, but the up-down volume is 1.3. So that's encouraging. So yeah, this one is not going to maybe move like NVIDIA, but it's had a really good track record. And technically, as you're right, it looks a lot better. And it looks a lot tighter than the last two names I showed you. So I wanted to give you something that's not so crazy.
Yeah, there you go. And just for a little more color on the accumulation distribution rating and the up down volume. So those are both volume metrics looking at accumulation versus distribution over a 13-week period, I believe, and then the up volume versus the down volume, the ratio of that over, I believe, a 10-week period. We were talking about this with Harold Morris on IBD Live earlier this week. So he favors the up-down volume ratio. I know also Jim Ropel, that's something, a hedge fund manager and IBD methodology follower, something that he looks at very closely. So if you see this above 1, that means more volume on the upside than the downside, which, if you're looking for institutional involvement here, we definitely want to see the big buyers, the big money in there, and that can be represented in the up volume versus the down volume to see, is it the buyers or the sellers that have control? So one way of looking at that. So Thanks for pointing that out, Ed. And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live. And we hope you join us, investors.com/IBD Live for all the details. But before that, coming up today at 5 p.m. Eastern, 2 p.m. Pacific, we have our weekly Swing Trader Status Update show hosted by Justin Nielsen and Mike Webster, and they will walk you through their thinking on this market and stocks to watch from a swing trader's perspective. So you can check that out live at Investors Business Daily's YouTube channel every Tuesday, 5 p.m. Eastern. And then we also post the video to investors.com/videos just like this one. So looking forward to that and IBD Live in the morning. And then I'll see everyone at 11 a.m. Eastern tomorrow morning on Vardy & Co. on Fox Business to give more perspective on where we are at in this market. Things are heating up. We'll have to see what tomorrow brings. All right, Ed, thank you once again. And thanks for watching, everyone. We'll see you back here tomorrow.